Hello and welcome to Frost Over the World, back after an eventful summer in all corners of the globe. Later in the programme we'll be looking at some of the events of this week and recent weeks. We'll hear from Thailand about the Prime Minister who was sacked for doing a cooking show on television. More seriously, from Georgia and from the new atom-smashing experiment in Switzerland. But first of all, the big news, the big late breaking news, stop press news from Zimbabwe. Late on Thursday night, President Robert Mugabe and opposition leader Morgan Tsvangirai reached a historic power-sharing deal after 7 weeks of tough negotiations. It's thought that Mr. Tsvangirai will become Prime Minister and Robert Mugabe will stay on as President. So why, after 28 years, did Robert Mugabe finally agree to share power? And what does this mean for Zimbabwe? Will it work? I'm joined now by Knox Chitiyo from the Africa programme, which he's head of at the RUSI. Do we believe what we've heard? Tsvangirai, Morgan has confirmed it last night. He said we've got a deal. But President Mugabe has not actually uttered as of this particular moment. But does it all sound legit to you?
Right now, as we speak, I think it sounds very, very positive. I would be amazed from all that we're hearing if there isn't going to be a deal. So I think the deal really is on the cards, that it has happened, and that perhaps Monday or Tuesday they'll actually sign the formal agreement. So now the question is, who holds the powers? As people have said in advance of this, Morgan Tsvangirai wanted to have all the power and just a title role for Robert Mugabe, and Robert Mugabe saw it the other way round. Who blinked first? It's hard to say. I think both sides have blinked because, as you said, Mugabe and ZANU-PF wanted Tsvangirai to be essentially a ceremonial prime minister with power still residing in ZANU-PF. ZANU-PF has been made to see that this is just not workable. There has to be a genuine power-sharing agreement. The MDC as well have had to back down a little bit because they wanted a ceremonial presidency for Mugabe initially, but they've also had to realize that Mugabe is still part of the political landscape. They've done very well to get significant power for Morgan Tsvangirai, but they've also had to work within a power-sharing system.
But how will it work in the sense that if, as we're told, you've got Robert Mugabe chairing the cabinet, with a cabinet, and Morgan Tsvangirai chairing a group of ministers, and them both having power, have you got two conflicting regimes? They must be linked in some way, I suppose.
Yeah, I mean, it does sound a little bit unwieldy at the moment, and of course we're all waiting to hear the full details of exactly how it's going to work. But I think that the idea is that cabinet sessions which discuss policy will be chaired by Robert Mugabe. The Council of Ministers with Morgan Tsvangirai will have the task of actually making sure or implementing policy. But both men, I think, will sit in on each other's sessions. Right. So it's a little bit unwieldy, certainly. But as a first step, I think it's a tremendous first step.
And so, is this a vindication of Thabo Mbeki's softly approach, that it's finally paid off? Because I guess the fact that he has confirmed that there is a deal, that's the most reassuring thing.
Well, definitely. I mean, as we know, President Mbeki has gotten a lot of flack over the years, and people have dismissed the quiet diplomacy. But, you know, I think he's been vindicated. But we should also bear in mind that his quiet diplomacy, I think, over the last month or so, has hardened. I think he's had given a lot of hard talk to both sides to pressure them into making a deal. So, you know, I think Mbeki himself there's been a sea change in his approach to Zimbabwe.
Yes, that does look as though it is. And in terms of the economy, which everybody is hoping that it's going to reduce to 10 million inflation figure and all of those things, but presumably, even with help from outside and more donations or whatever, it's going to take time to repair this economy, isn't it? It's not a matter of a year or two, is it?
No, I mean, certainly, I mean, we went through this 1979 when the war ended we start again in 1980. It takes time, it takes years, but what the new government will have to do is to decide on prioritization. What is the most important? There's a great weight of expectations, and certain things have to be done immediately, like the health service, the issues around fuel. You can't rebuild the economy when there's no petrol. So there's certain things which people will expect to be done very, very quickly, and other things which, of course, will happen over a longer period. So prioritization and allocation of resources is vital, and the role of the international community, I think, is going to be a big, big issue as well.
And in terms of moving ahead, there's one interesting thing we're just getting news of, that in Africa, but in this case in South Africa, Jacob Zuma, who is the favourite to be the next president of Thabo Mbeki we were just talking about, we're just hearing that in fact he has been cleared of all charges of corruption and so on. So that clears the way to Jacob Zuma's road to the presidency, doesn't it?
Well, yeah, I mean, it certainly enhances his chances because, of course, it was going to be very difficult for him to go for the presidency with this case hanging over him. And, of course, if he had been found guilty, then that would have been the end of the road. So for Jacob Zuma and the ANC, it's certainly very, very important. But, of course, it has been a very divisive issue within South Africa itself. And I'm sure there'll probably be a number of people within South Africa who may have questions about the judicial process. But certainly for the ANC and perhaps for South Africa itself, I think this is also very, very important. And of course it has repercussions on Zimbabwe as well, because Zuma and the ANC have been leading actors in the Zimbabwean drama.
Thank you very much. As ever, it's a joy to see you.
Thank you very much, David.
From the subject of Zimbabwe to New York. The US government's decision to take over the huge mortgage agencies Fannie Mae and Freddie Mac could well have stopped a global meltdown in the bank and financial sectors, for now at any rate. The two companies account for an astonishing $6 trillion of US mortgage debt. That's $6,000 billion. Other banks across the world have huge investments in Fannie Mae and Freddie Mac, and if they'd been allowed to collapse, might have taken others with them with bad consequences. We'll hear two views of this. First, from someone who knows it all. He's doubly qualified to be with us since he's an expert in two areas, in business and in journalism. Mort Zuckerman owns Boston Properties, the largest investment trust in the United States, and he's also the editor-in-chief and publisher of US News and World Report. A true Renaissance man. Mort, have you been impressed by the way that the US government and the Federal Reserve have tackled these issues?
Yes, I mean the real problem, of course, as you indicate, is the size of Fannie Mae and Freddie Mac literally made them too big to fail. Not only would they have damaged the financial stability of many financial institutions around the world who held literally trillions of dollars of their paper, and if that paper had become illiquid or had collapsed in value, it would have really created a systemic risk to the financial system, but it would have lost a great deal of confidence in the United States and might have caused a run on the dollar. Here at home, since they today represent literally 75% of all mortgages on homes granted in the United States, it would have further led to a huge decline in the housing market, a decline in home prices, and a further exacerbation of the damaging effects which the collapse of the housing bubble has had on the entire U.S. economy, but especially on the financial system.
And the other headlines this week have been about Lehman Brothers. How serious is that, do you think?
Well, Lehman Brothers is, as you say, a respected investment bank. At this stage of the game, their total equity represents only about $3 or $4 billion since it's collapsed by over 90% this year alone. They got stuck with a huge amount of real estate paper, that is mortgage real estate mortgages of all kinds. That paper has just collapsed in value as the housing bubble has burst here and jeopardized many mortgages where the mortgages exceed the value of the homes, and therefore the price and value of the mortgages has gone down. And that paper which they hold has gone down dramatically, and that's basically wiped out virtually all of the operating equity of that company. And so now the feds are going to step in because there are so many interrelated financial transactions between Lehman Brothers and many other financial firms that it too would create an untenable risk for the financial system. And therefore the banks are trying to work, I mean the Federal Reserve is trying to work with other banks to buy in Lehman Brothers, just as they did with Bear Stearns.
And in terms of the future now, some people say that because of the actions taken on Fannie Mae and the rest, that this could be the turn of the tide. Is that over-optimistic?
Well, nobody really knows. The real problem is we have had a bursting of the housing bubble. Housing prices, which had gone up at the rate of or average of 3% a year from 1945 to the year 2000, went up by 10% a year from the year 2000 to the year 2006, an unsustainable rate, and a bubble that was caused by very low federal interest rates and very lax lending standards that made it possible for many people to buy these homes at virtually 100% mortgages, even when they couldn't afford to pay the debt service on these mortgages. At some point, the music stopped. Housing prices stopped going up. They started to go down. The mortgages turned out to be worth more than the value of the homes. Today, there is an estimate that more than 10 million mortgages exceed the value of the homes, which means homeowners have a negative equity in their homes, and nobody knows what they're going to do. Right now, so many of them are going into default and going into foreclosure that a lot of this paper that has secured being securitized, bundling a lot of mortgages and sending out securities all around the world to finance these mortgages. Those prices have dropped, and a lot of the financial institutions not only hold those mortgages and securities, but speculated on them. That they too borrowed dramatically. Now, Lehman Brothers and Bear Stearns, for example, had a leverage or a gearing, however you want to call it, of $32 or $33 of debt for every dollar of equity. Fannie Mae and Freddie Mac had $65 of debt for every dollar of equity. It was in the gray zone between a public and a private entity. It was run for private purposes, but there was an implicit backing of the federal government. That's all been changed because the feds had to step in and make sure that that company didn't collapse. In the process, they wiped out $85 billion of shareholder equity. But in the meantime, they have saved the liquidity of Fannie Mae and Freddie Mac and preserved their role. But home prices are still declining. And there is something called a foreclosure spiral, which is the following. When homes are foreclosed, because of the nature of the way they are financed, those homes are thrown on the market. And so it creates an artificial depressant on home prices beyond what it would be in terms of supply and demand. And this may very well continue to crack open the pricing of homes and create a huge decline further in not only house prices, but in the value of the paper that secures them. It's a $22 trillion asset, that is, housing is, the largest single asset on the balance sheet of the average American family. And if that drops, as it's already dropped, housing prices have already dropped at least 20%, and most people expect it'll drop another 15%, you're talking about a loss of equity values of $6 trillion or more. We have not had anything like that in 70 years, not since the late 1930s. Nobody knows what the effect of that is. Nobody knows where the bottom of that is. Nobody knows where that ends.
Mort, thank you very much indeed. A delight to have you with us. Thank you for joining us. That was
my pleasure, David.
Bless you. That was Mort Zuckerman, and this is The Commercial Break.